Hello and welcome to Business Morning on this 14th day of December 2020. I am Bisi Adebayo. Brent crude is trading above $50 per barrel this morning, very well above Nigeria's oil benchmark of $40 per barrel in the 2021 budget. Now, the recent upsurge in oil price has been boosted by hopes that the rollout of coronavirus vaccines will increase global demand for fuel. Brent crude was trading at $50.51 a barrel, up more than 1% in early trade, while US WTI crude was close to 1% higher at $47.03 a barrel. Prices also extended gains amid supply jitters after a shipping firm said its oil tanker exploded after being hit by an external source while discharging at the Jeddah port in Saudi Arabia. Brent and WTI have rallied for 6 consecutive weeks, and that's their longest stretch of gains since June. Meantime, the International Monetary Fund and the World Bank have reiterated the need for Nigeria to come up with more policy reforms to drive economic growth and prevent millions from falling into poverty as the country deals with the devastating impact of the COVID-19 pandemic on the economy. Both multilateral lenders are calling for a unified and flexible exchange rate, among other critical policies, to ease external imbalances and boost activity in the country, which led into its second recession in 4 years in the third quarter. Of course, the reports by both multilateral lenders come on the heels of bold policy actions taken by the federal government with a cautious move not to exert severe hardship on its people. Of course, we'll be discussing this issue much later on the program today with the CEO of financial derivatives company, Mr. Bismarck Rewani. But meantime, let's talk about data from the National Bureau of Statistics released last week that showed that Nigeria's foreign trade with the United States this year slumped to around 1.35 trillion naira, and that's its lowest since 2015. Import, which is the major trade relation with the U.S., which is Nigeria's import, stood at 482.3 billion naira in September. And that was, of course, largely due to the COVID-19 lockdowns, which affected trade between both countries. But one institution which has, in the last 60 years, positioned itself as a trade channel between Nigeria and the United States is the Nigerian American Chamber of Commerce, and the Chamber's President, Mr. Oluwatoyin Akomolafe, joins me now here in the studio to discuss ways to further improve trade relations between both countries and tell us more about what the Chamber is doing in this regard. Good morning, and thank you for coming on the program, Mr. Akomolafe.
Thank you very much. Good morning to you. How are you doing?
Very well, thank you, sir. All right, let's start with looking at the trade between Nigeria and the United States. It's not been really prosperous this year. Of course, that's due to the COVID-19 pandemic. But can you tell us what your chamber has been doing to help to boost exports to the United States?
Well, we have been very active with the AGUA program, this African Growth Opportunity Act. We also have the SMEs. We're exporting and then enabling small-scale, medium-sized companies to be able to move their products to the U.S. market. The CSO, that's the CSO AGUA headquarters in Washington, D.C., have been very active in trying to support all our activities. We are experiencing quite significant increase in trade with the U.S. now. And it's going to get better.
Of course. Let's talk more about the AGUA, of course, which you just mentioned now. Since its inception in 2000, how much of an advantage has it been to us as a country?
Well, the implementation strategy, the agreement wasn't signed for a long time. That was all delayed the program getting into yielding benefit for the members. We got it signed recently, and now we have a very active Minister of Trade, who, with the Nigerian Export Promotion Council, they have both been very supportive for this program.
So what about your members? How have they benefited? If you were to assess the program since it commenced, how has it been?
Now we have the agro sector very active. We have very efficient sector chairmen for the various committees that they're making sure that members have benefits of these programs.
All right, so your chamber now has or serves as AGOA resource centers now, but let me ask you, would you think that Nigeria has actually taken advantage of this scheme?
Well, it was slow to start, but now we merged with the AWEP group, and they have more relationship with smaller producers and harness all these resources together to make sure that we can open the markets for them in the U.S.
Well, in about 5 years now, the AGOA would expire. I mean, the U.S. had earlier expressed concerns about the performance of the scheme, noting that petroleum products continue to dominate or account for the largest portion of AGOA imports. But what's being done to change this narrative?
Well, petroleum products was before, but now with the agri products going in, and then you have textiles, adire. Nigerians have been very creative. And if you go to the US, New York, they have a lot of African wares, mostly from Nigeria. We have Africando, New Miami, every year, with all the products being displayed. And they move this across to Central America, South America, and the West Indies.
So what has your chamber done in terms of providing funding for your members?
Well, we have different programs, breakfast meetings. We bring in people from private sector and public sectors to educate members how to have access to finance. And it has been very helpful. Most of the CEOs of banks, Access Bank, Fidelity Bank, they all come to encourage members to seek funding assistance, the various banks.
Now let's talk about your members now. What's the membership like? Well, from what sectors do you draw your members from?
Well, we are now about 1,000 people, members we have. We have different committees, sectors, agri, logistics, programs, health sector, real estate sector. In fact, they'll be very active and also encouraging loans for the many housing schemes that they've been embarking upon.
All right, let's talk about the victory of U.S. President-elect Joe Biden now. How is that victory likely to boost more trade relations between Nigeria and the U.S.?
Well, we, the Bilateral Chamber of Commerce, we are non-political, so we are to encourage trade between the U.S. and Nigerian companies. It's an institution that will outgrow any political situation. So we are very apolitical. We deal with every government.
All right, let's talk about your chamber now, which is already 60 years. How much of an impact would you say that your chamber has made regarding standing as a pillar between the relationship, I mean, talking about the relationship between Nigeria and the U.S.?
Well, a lot of members have benefited from the relationships with the U.S. companies. We have trade missions. We have African products, which is being sponsored by the U.S. Consulate and the U.S. Embassy in Abuja.
So ahead of the celebration, which is scheduled for the first quarter of next year, are there plans to organize trade missions and create more opportunities to assist your members, perhaps?
Yes, we postponing the celebrations, obviously because of COVID. So by first quarter next year, and I'm sure you're going to be very supportive of our programs, and thank you very much again for supporting us. We will be informing you and let you know.
So what are some of the key projects that your chamber has been involved in?
Where different sectors, we have been able to get the small-scale industry. That's our focus. And encouraging also the rural people with the amalgamation of a competition between our weapon and NCC.
So we're aware that your chamber has no physical establishment here in Lagos. Of course, bearing in mind that the AFCFTA will commence in January next year. Are there any plans to establish a center here in Lagos to add to the 8 chapters you already have spread across the 6 geopolitical zones of the country?
How do you mean? I didn't understand what you're saying.
Your chamber has no office, physical address here in Lagos. So are there any plans to do that in the future?
Point of correction, we do have an office on the secretariat, but it's rented. So we are trying to get our own building, and we've been raising funds for that. And your station also has been very supportive in advocacy.
All right, we'd like to thank you very much, the President of the Nigerian American Chamber of Commerce, Mr. Oluwatoyin Akomolafe. Thank you for coming on the program.
Thank you very much. Thanks so much.
All right, Business Morning returns in just a moment. And still ahead, we'll be talking about the IMF World Bank latest report on Nigeria. Plus, we'll do a review of the equities market. Please stay with us. All right, welcome back. Now, time now to review last week's performance at the Nigerian stock market, and Edidiong Ewang will be doing that for us. Good morning, Eddie. It was indeed a very tough week at the markets last week. Of course, we saw all those losses. And interestingly, on Friday, it could have actually turned out better, but we saw Dangote Cement, of course, the market giant, single-handedly bring down the market. But how are the traders actually gearing up for the new week?
Well, BC, I was actually going to mention Dangote Cement. You know, it appears that the bears emerged victorious in the markets last week as investors went on a profit-taking spree. Now, just like you mentioned, Friday started, you know, on a positive note, and we all kept our fingers crossed, hoping that Friday was going to be the one day we'll see some gains in the market during the week. But like you mentioned, the 8% decline on Dangote Cement single-handedly dragged the market down on Friday. Now, the market closed negative last week by 2.53%. We've dropped to new lows. We're at 34,250.74 points, while the equity cap lost over 460 billion naira last week, and we're now at 17.902 trillion naira. Now, volume was higher. The volume was higher by about 35%. We saw 2.26 billion units worth 20.99 billion naira traded in 23,722 deals. Now, the most traded stocks by volume were UBA, Zenith Bank, and FBN Holdings, while GT Bank, Zenith Bank, and UBA topped the value chart. Now, look at it. The sector performance is red. The banking index was down 2.93%. And we saw a lot of profit taking on tier 1 banks last week. And, you know, I'm not surprised that that is why the banking sector is down. Consumer goods was down 1.55%. Dangote sugar was down last week. I think also Cadbury also posted declines. For the industrial goods sector now, of course, we all know what happened to that sector. That 8% decline on Dangote cement on Friday really impacted that segment of the market. Insurance was down 1.82%, while oil and gas declined 0.25%. But analysts, they believe that this week we're still going to see more profit taking with a little bit of bargain hunting since yields in the fixed income space are really low now. So, we're not expecting any much from that segment of the market. The unlisted securities market was also, it was positive last week. We saw the index up 1.98% at 733.77 points, while the market cap was at 545.41 billion naira. Now, we haven't seen a lot of movement in this market, but hopefully towards the end of the year, just like in the equity space, as investors are rebalancing their portfolios, hopefully we should see some movement in this market. We saw about 6.45 million units worth 545.41 million naira traded in 38 deals. Now, just before we stop on this market for now, the bond market was bearish all through last week. It started on a bearish note and it was bearish all through to the end as we saw yields increase in that segment of the market because, investors were waiting for the CBN special bill. So everyone was just trying to see, okay, what's happening, what's going on, what should we do, should we sell or should we buy? But we saw a lot of, interest in the bond market last week. On Friday, though, we had 34 deals worth 14.45 billion naira on that counter. The Nigerian Treasury bills market was mostly quiet last week. Now, we saw the week started off on a quiet note, but from Wednesday, it was mute due to the CBN special bills that was introduced in the markets. We had a primary market auction as well. So there was a lot of liquidity in that system and investors, and the yields were also really low. So investors didn't really know where to put their money in that segment. So, but we'll have to pause on the markets for now, BC.
Yes, indeed, Adigdong. When we return in just a moment, we'll continue from where you stopped. I spoke to a trader last week, and a lot of the traders are still quite optimistic that the losses we saw at the equities markets this week will probably be reversed. So we'll wait and see. We'll come back to you, Adigdong, in just a moment. We'll be right back. Stay with us. All right, just before we go back to a review of the markets, let's just do a quick recap of what we saw at the crude oil market this morning. Of course, Brent crude is trading above $50 per barrel this morning, and that's above Nigeria's oil benchmark of $40 per barrel, and that's in the 2021 budget. And the recent upsurge that we've seen in oil price has been boosted by hopes that the rollout of coronavirus vaccines will increase global demand for fuel. Brent crude was trading at $50.51 a barrel in early trade, and that was up more than 1%. And the US WTI crude was also up by almost 1% at $47.03 a barrel. Of course, prices were also up, driven by supply jitters after a shipping firm said its oil tanker exploded after being hit by an external source while discharging at the Jeddah port in Saudi Arabia. Brent and WTI have rallied for 6 consecutive weeks, and that, of course, is their longest stretch of gains since June. All right, let's get back to Adigdong to continue with the review of the equities markets. Adigdong, I believe you'll be speaking with a trader now.
Thank you, BC. Yes, you are right. Mr. Mohammed Kaide joined us now, and he's the head securities dealing at APT Securities and Fund. Good morning, Mr. Kaide. Thank you for joining us on the program.
Good morning, everyone.
Well, last week, the market ended the week on a negative note. What is your outlook for this week?
Yes, market ended last week on the negative trading days, and you see that all through the 5 trading sessions we have last week was a negative. And we expect that flow into this week, we expect that the market to maintain a kind of a balance, not going straight away southwards all the trading session. We're expecting that we'll have either 2 days gain or 2 days gain, 3 days loss, or 3 days gain, 2 days loss. So we're expecting such a thing in the week that we're about to, that we're in now. And for now, we're expecting that whatever we are going to experience, market is getting prepared for the rally that we are supposed to experience towards the last, towards the trading days of this year. So we are expecting that going on this week, we expect that we are going to have 2 days gain, 3 days loss, or 3 days gain, 2 days loss.
Now, speaking about, looking forward to the rally, analysts believe that this profit taking is going to happen longer than we've expected. Do you share those sentiments? And if so, how long do you think this will last? Or how long do you think it will take before we see that rally?
Yes, I agree with them. I agree with those analysts to an extent because of the fact that we had a rally in November. And that rally is very substantial. And that is why the expected rally for the year end is now taking long like this. What we normally have is that we used to have this Santa Claus rally around the middle of December. Now, we are already in the middle of December, but because of the rally we had earlier, make it a prolonged one up to this week. So we should expect that this week we may not experience that rally, end of the year rally. But what we are saying is that either the week of Christmas or the week that after it, we should expect a rally, because rally is a sure thing that's supposed to happen, because the portfolio investor and fund manager need to balance their portfolio towards the end of the year. So we expect the rally to come. But that does not mean it will not be delayed. And that is why it's been delayed up to this moment. So moving into next week, we expect the rally to start up from next week.
Now we've seen, while we wait for that rally, we've seen a bunch of earnings, Q1 2021 earnings forecasts come into the market. Now we've seen from Arabico, eTransact, Okumo Oil, and some insurance companies. What do you make of those numbers?
Okay. These numbers that we're looking at, the forecast is always a forecast, but how real are those forecasts? Is when you look backward to what we have experienced so far, you look at second quarter results compared to third quarter results, you realize that there is a kind of a bit, there is a growth in what we had in quarter two compared to quarter three compared to quarter two. So going forward, we expect that thing will flow. That growth is also going to flow into the fourth quarter. And that is why you can be able to rely on those forecasts, that the forecast that we are going to have, that we are having now, is actually real, and we expect that those figures are going to make sense, and they are close to a real situation of things. So we expect that those forecasts are still reliable.
Well, it's a new week and markets began trading some minutes ago. What are the numbers looking like?
The numbers looking like today, as the market is going to lose for today, and it's not. I've said it earlier that we should not be panicked. You see, the trader and the investor are trading cautiously, and I believe that going forward, the market is preparing for that rally that's going to come towards the end of the December. And I always encourage the investor and trader to trade and also invest in those stocks that have fundamentals. Going forward, I believe that the market is still going to go in at this moment because of that rally that we have to see that is coming.
All right, Mr. Kaide, thank you for your input on the program. Do enjoy the rest of your day.
Thank you very much.
Mr. Muhammad Kaide is the head securities dealing at APT Securities and Funds. Well, BC will hold on to what he says, and we'll be looking forward to that rally in the market.
Absolutely. We can only keep our fingers crossed. Thank you, Eddie. We'll get back to you much later on the program. Now, let's get into the conversation about the latest call by the International Monetary Fund and the World Bank for the need for Nigeria to come up with more policy reforms to drive economic growth and prevent millions from falling into poverty as the country deals with the devastating impact of the COVID-19 pandemic on the economy. The CEO of the financial derivatives company, Mr. Bismarck Rewani, joins us now to discuss this issue. Good morning, Mr. Rewani. Thank you for making out time to speak with us this morning. Of course, you definitely must have gone through the latest reports by the World Bank and the IMF. What do you make of all of what they've said?
I think basically what the World Bank and the IMF, what we call the Washington Consensus, are telling Nigeria that we had pre-existing conditions, some structural rigidities in the economy before the pandemic, and that we should not attribute our problems to the pandemic. The pandemic only made things worse, but the things were actually bad before then. They also refer to what happened in 2015, 2016, when delayed in embarking upon reforms and inadequate dose of the reforms led to negative outcomes. So what we're saying, what the World Bank and the IMF is saying, that one, commendable efforts have been made in addressing the question of electricity tariff, exchange rate unification, subsidies in petroleum products, and reopening of borders, but they've not gone far enough. And that if nothing happens, and if we continue with the underdose one and reluctant and ambivalent approach to reforms, then the economy will unravel. So let's get it very clear. One, that the reforms that are being embarked upon are necessary. Two, that the reforms are not adequate. Three, that the momentum of the reforms should continue. And that if we do not do that, what happens to anybody who takes an underdose of medication is that you have a relapse, and the relapse can be much more debilitating than the original ailment in the first place.
Well, just like you mentioned now, of course, the IMF and the World Bank seem to back some of the policy adjustments we've seen by the federal government, talking about the electricity tariffs and the regulation of the downstream sector. But then, are you saying that these policies are not enough? Looking at the impact, for instance, the increase in electricity tariff, the increase in the price of petrol, looking at the impact of these policies, don't you think that it will cause more hardship on Nigerians?
First and foremost, no, there can be no gain without pain. One. Two, the truth is that the reforms are necessary. Three, the reforms have to be adequate. But the question is that you have to now use the gains from the reform to actually augment and help the people. You know, you have to invest simultaneously and adequately in healthcare, in unconditional transfers, in education, in infrastructure, so that as you are carrying out the reform, you are also investing in this which is creating jobs and addressing the question of multidimensional poverty. You cannot use reforms only to boost government revenue without boosting the government expenditure and impact on the people. So it is true that it's not only to reform, but you have to be efficient in the use of the resources. What has happened is that there's been some reform, and there's complete inefficiency, right? So we have to reform the way government and the productivity in the government sector, and so that we can have the adequate results. If not, what you are going to have is just a boost in government revenue and no corresponding increase in productivity of people. And that is where you have the investment multiplier, which helps to boost income.
Now, on one hand, President Buhari had said that he intends to lift 100 million Nigerians out of poverty in 10 years. And on the other hand, the World Bank is projecting that 11 million people will fall into poverty by 2022, bringing the total number to 100 million by 2022. I mean, where does this leave the president's ambition? Is it still possible as things are looking?
Well, there are two steps. One, first and foremost, to stop people from going into poverty. And secondly, before you lift them out of poverty. So what the World Bank is saying is that 12 million more people are going to go into poverty. So, and that is a challenge, right? And don't forget, this administration has only about two years left. So they can only do 2 of the 10, right? So I think that's a great ambition, and it's something that's laudable. But what you have to deal with is what is achievable and what is realistic at this point in time. So first and foremost, we have to stop people from falling into poverty. Secondly, we have to do whatever it is to lift people out of poverty, like the Chinese have done. And that can only happen if there's private sector investment and an investment and these adequate reforms that take place at the same time. And that is why the way the currency is being managed has to be addressed. And that's what the multilaterals are saying, that first of all, make sure that the currency of our valuation is dealt with, and make sure that there's flexibility in the management of the exchange rate. If there's no flexibility in management of the exchange rate, nothing you do will have the impact that you desire. Then you have the question of artificially low interest rates, which is actually reducing the amount of savings and by implication, reducing the amount of investment. This has to be addressed. Artificially low interest rates actually demobilizes savings rather than mobilize savings. And when savings drops, so also, but if you have artificially low interest rates at the time of high inflation, where food inflation is about almost 17.5%, and you know that we have projected, and inflation comes out tomorrow, that this inflation rate is going closer to 15 at the time of the pandemic. So you will have a classic case of stagflation. And that actually will undermine the reform that you're carrying out. So you can't have it both ways. One, you have to stop the forex rationing. Two, you have to unify those exchanges as fast as possible, and you have to maintain flexibility. Thirdly, you have to get rid of subsidies and use the proceeds of all of these things, including what the central bank is doing with the ANCHORS program, to actually begin to impact on the economy in terms of creating jobs, increasing investment, and making sure that we achieve the desired objective of accelerated growth and sustainable growth and inclusive growth at the same time.
Now, talking about growth now, the IMF had projected a 1.5% subdued growth, of course. But do you think that the current reforms that we have can actually take us beyond their projections?
And I won't be surprised, but let us first of all start from basic principles. For the year 2020, we are likely to get a negative growth of about 4.7% for the year, right? Now, the second part is that in the year 2021, there will be a recovery. Well, is the recovery going to happen at the beginning of the year or in the middle of the year? We think it will happen at the middle of the year. And then at the end of 2021, you are likely to, with some luck, maybe 1.5%. And that is below the population growth rate. And that is below what other countries are doing. And I'll give you an example. South Africa went way down. They had almost minus 50% in the first quarter. But guess what? They are back up again. And they are growing positively by quarter on quarter plus 9%, year on year plus 50%. Ghana is doing the same thing. And the exchange rate, the rand has appreciated by about almost 20% since March this year, while our currency in all markets have actually depreciated. So the question is that you have to be straightforward and ruthless about the way you implement your reform. Secondly, there's no question that you can't play games with this because eventually everything comes out in the wash. So Nigeria as a country, and I'm sure policymakers are determined to do this, will have to be less ambivalent and more straightforward about the reform process so that the reform process has momentum and that we begin to see the results. If you delay it and you take an underdose, what happened in 2016, where the currency went to a particular level before coming back, could happen again. So, but this time I'm sure that, like the World Bank and IMF have said, and the Central Bank of Nigeria and the Ministry of Finance, they're all determined that the goals are aligned. It's just a question of the dose, whether the dose is adequate or you need to increase the dose to achieve the desired results. That's what we're going to get.
Now, you talked about countries like South Africa and Ghana, on the path to recovery. Well, what are these countries actually doing? Is there anything they are doing that Nigeria probably needs to tap into?
Basically, first and foremost, the difference between their inflation rate and their interest rates are very clear. You can't have inflation rates at 15% or 14.3% and your interest rate at 1%. That's a recipe for disaster. So if you look at, in Ghana, the inflation rate is about 10.8, while the interest rate is about 15%. In South Africa, the same thing. So yes, you can, I'm not saying we should take the rates up to 15%, but directionally you have to move in that, and there has to be a signal because money is a store of value and investors look for value in the long run. So I think that's clear. Two, you have to, your currency there has to be flexibility in exchange rate management of Nigeria. And flexibility means actual and true and honest flexibility. And I think that is being done, but it has to be done much more robustly and aggressively, so that when people now know that we can do that. Now, how do we deal with the short-term problems? First and foremost, the borders should be open almost immediately. Secondly, we need to sell as much foreign exchange to the manufacturers so that they can increase output. And then thirdly, we have to align our interest rates closer to inflation so that savings can be mobilized. And then, so we are dealing with the structural rigidities, the fundamental strategic problems at the first time, in the first instance. And finally, we deal with the operational problems as they come. So I think that with price of oil at $48 a barrel, we are at least $18 above where we thought it would be at this time. And production is going, the production levels are at about 1.4. So we are in a good place in terms of our external balance. We are in a good place in terms of the things that we can control, basically. But what we need to do is to deal with those 5 things. 1, open the border immediately. 2, deal with the subsidies, and use the proceeds to actually lift the people out of their current problems. 3, have the exchange rate aligned and managed flexibly against our competitive partners. And 4, we invest massively on infrastructure so that we can create jobs on the roads, the rail, so that if you start the Abuja-Kano Expressway and move the contractor side, Lagos-Ibadan, which we are doing, and Nigeria will actually become a construction site. You will see the impact within 6 to 9 months. The things will be humming again. So I'm optimistic to the extent that if we do the right things as recommended by our partners, the World Bank and the IMF, the African Development Bank, and others, we would achieve the desired objective in a very, at least sometime in 2021 and 2022.
All right, let's just keep hope alive and hope that things actually get better. We do appreciate your time, CEO of Financial Derivatives Company, Mr. Bismarck Rwani. Thank you for speaking with us this morning.
Thank you for having me.
All right, we'll get updates on Brexit when we return in just a moment. Plus, we'll also talk about the debt and currencies market. You stay with us. Brexit, Brexit, Brexit. Now, that's what's on the lips of many across the world, especially after Sunday's discussions. But let's get to hear from Juliana Olayinka how it's all playing out in the UK this morning. Good morning, Juliana. It's the morning after the UK and the EU agreed to extend post-Brexit trade talks after a call between the leaders on Sunday. But what were the major unresolved topics and what sound bites are you getting this morning?
The phone call, the fact that Ursula von der Leyen, the European Commission President, and Prime Minister Boris Johnson released a joint statement has, cheered investors. That's given people a lot of optimism, especially as it has been particularly tense over the past couple of weeks, especially on Wednesday during that 3-hour dinner date in Brussels, which led to the Sunday deadline. The fact that they have now decided to increase it, and they did say that they're not going to put another deadline in place. Going back to Boris Johnson's words this time last year, he said it would be a failure of statescraftship if he doesn't get a deal. So there is optimism. Of course, it is the same issues we believe are still being decided. This is a state-level playing field, governance, who is going to govern this new relationship, and also fisheries. Now, Prime Minister Boris Johnson has, of course, been telling businesses here in the UK to get ready for the end of the year, the transition period, which is just 17 days away. The problem is businesses just don't know how they're going to be importing and exporting out of the EU. We also heard from the Office for Budget Responsibility last week. They said a no-deal Brexit would take off £45 billion off Britain's economy. We're already experiencing high unemployment levels because of COVID. That's expected to increase. There are a myriad of issues. Just before I came into the studio, I did actually read from one of the most senior political correspondents here in Britain, and what he's hearing on the streets of Westminster is that if Boris Johnson doesn't manage to secure a deal with the EU, then his position is untenable. So there is lots going on at the moment. I think it is a good sign that, they managed to release this statement together. We are expecting now the EU's chief negotiator, Michel Barnier, to start negotiating with Lord Frost. So it's all to play for. But of course, it's very cliche to say time is running out, but we do have 17 days. But let's just see.
Yes, Juliana. Meanwhile, supermarkets have been told to stockpile food as fears of a no-deal Brexit continues to mount. And on the other hand, the British Retail Consortium, just like you mentioned, is warning Britons not to buy more food than usual ahead of January 1. Of course, Juliana, Christmas is barely 2 weeks away, if not less than 2 weeks. So how will all of these play out?
Well, it's all playing out. I think, the British government are pretty worried. They saw what happened just before the start of the first lockdown in March. We all saw the pictures, and it wasn't just here in Britain. Across the world, people stockpiling toilet roll, non-perishable goods. There were major concerns. So according to the Sunday Times yesterday, they published an article saying that senior government ministers have been warning the main supermarkets to make sure they are very well packed in their stockpile, that they have enough goods. But it's not just food. I think food obviously is a concern, but it's also medicines. According to the same report, they're asking hospitals to make sure they have at least 3 weeks worth of supply. This hasn't been confirmed by government ministers of whether or not they've been asking people to do this, but they are telling people not to panic, that people should just buy their typical items, what they would usually buy to get them through Christmas and over the next couple of days. I think one of the major concerns, especially pointed out by the British Retail Consortium, is fresh vegetables. They're expecting that to be of a delay for about 3 weeks. So if you're somebody like me, that you like your fresh veg with your dinner, then there could be cause for concern. But I think we are going to start getting some of these panic messages. We have had them throughout the year, but of course, the conversation has been completely dominated by COVID. But now it's all on the wire. So yes, there are concerns that people may be stockpiling. We haven't seen any instances of that as of yet, but the government don't want a repeat of what we saw back in February, March, April.
Maybe we should just hope that an extension of Brexit talks will continue to cheer the optimism. But then it's a new week, Juliana. We know that Brexit will continue to dominate headlines. But is there any other major news to look out for?
Well, lots. We're coming to the end of the year. This is the last full trading week before Christmas. We're going to be expecting a flurry of revenue updates from various companies. Then, of course, all eyes are going to be on the BOE MPC, the Monetary Policy Committee of the Bank of England. They're meeting on Wednesday and Thursday, and they're going to be, of course, looking at how they can provide some fresh stimulus into the British economy. Interest rates are already at a record historic low of 0.1%. Will there be any more quantitative easing? I doubt that. I think we're likely to see Andrew Bailey put, the brakes on until we get a Brexit deal. He's been saying and warning over the past couple of weeks that it's in the interest not just of Europe but of Britain to get a deal. Until we have a deal, until we know whether or not we're crashing out under World Trade Organization tariffs, we're going to have to wait and see whether the Bank of England move. Also, quite interestingly, we are going to be having an update on the lockdown tiers. At the moment, large swathes, I believe about 55 million people are in lockdowns 2 or 3, especially here in London. Now, London at the moment has the fastest growing infection rate in the country. There has been lots of tension between leaders in the north and leaders in the south. A lot of people in the north believe that London have been getting off very, very lightly. Sadiq Khan is trying to do his best to convince ministers and even convince the public to try and curb their enthusiasm. It's been absolutely jam-packed in Oxford Circus and around central London where people are doing shopping. Everybody is thinking that on Wednesday, London would be put into tier 3, which means pubs, bars, the hospitality industry will close once again just before Christmas. That's what nobody wants, but it's almost inevitable because the COVID infection rates are skyrocketing high here in the capital.
And I will always say to you, Juliana, make sure you stay safe. Let's all stay safe this period. All right, we'll see you again in the afternoon. And it's back to Eddie to review the debt and currencies market. You have the floor now, Eddie Young.
Thank you, BC. The bond market was bearish all through last week, and those sentiments, we saw those bearish sentiments all through the week as investors sought to book profit on some maturities. Let's talk to Constance Onya, a fixed income dealer at Access Bank. Good morning, Constance. Thank you for joining us on the program.
Good morning.
Well, the bond market, like we've just said, was bearish all through last week. Should we be expecting the same bearish sentiment this week?
Oh, okay. The bond market was bearish. This was because the CBN had sold some bills to the banks, and people were anticipating that rates would go up, and it actually went up from about 7.1% to 7.8%. This week, we expect that we'll have some mixed sentiment kind of trading, where we'll see also some bearish trend, and then we'll see people take profits just as this rates go up. Some people will just want to take position because they feel the rate is good. So for me, I feel coming into this week, we'll still have some mixed sentiments trading.
Well, this is the last bond auction week, I believe, on the 16th of December. What should we be expecting from that auction?
Okay, so we should expect that it will be oversubscribed as well. But currently, secondary market rate is much better than the secondary market rate is much better than the rate DMO sold the last time. So we don't really expect any changes as such, as the DMO might want to maintain their stop rate lower than where it was before. But we know that it will be oversubscribed.
What's your outlook for the Treasury bills market, both the Nigerian Treasury bills market and the OMO market? I mean, we've seen yields, at really low levels in that space. What should we be expecting from both markets this week?
Okay, so for the NTB space, which is always client-driven, we expect that we'll also see some mixed sentiments. If you recall, the last auction stop rates closed at 3.2, coming from 0.15, and that shook the market a bit. We saw rates where people started offering at 1.5, even though a lot of people did not win at that rate. On Wednesday, there's another primary auction coming up where there'll be a total of 7 billion on offer in the market, and just 2 billion across the 91 days, 2 billion on the 182 days, and 3 billion on the 364 days. This auction is particularly really low and might not determine anything, but market is expected to be mixed sentiment in the OMO space and the NTB space as well.
All right, Constance, thank you for your input on the program. Constance Onya is a fixed income dealer at Access Bank. Obviously, just before we go, we'll just quickly look at those numbers. On Friday, we had 34 deals worth 14.54 billion naira. Like Constance had mentioned, the Nigerian Treasury bills market has been quiet lately. It began the week on a quiet note, but then on Wednesday, we saw that market was flat. Investors sold off. On Friday, there were no deals on that counter. Also on Thursday, we didn't have any deals on that counter. While the OMO market it's been mixed. It's been bearish and it's been bullish as well. So we've seen a bit of mixed sentiment on that counter. On Friday, however, we had 14 deals worth 14.15 billion naira. Well, hopefully, with the bond auction and the primary market auction for the Nigerian Treasury bills market this week, there's going to be a lot of liquidity in the system. So we may see some bearish sentiment in that market this week.
The investors will be looking out for. But as always, we'll always hope for a profitable trading day and a profitable trading week. All right, that's where we end today's program. Thank you for watching. I am Bisi Adebayo.